Oh, okay. This is the introduction. This is welcome to the. I can't remember what I was going to say. Welcome to the Ain't Nothing Gonna Break My Stride webinar with Rob Booker
and Dave Murphy
and Jar Jar Binks.
Mr. Latino here. Thank you. Hey, where's Annie?
Annie, don't secure the sad people.
Annie, don't do that.
Oh, that's pretty funny. We are so happy to have you here, everyone. We welcome you. We're going to look at some support and resistance charts today. We're going to look at, definitely going to look at some 60-minute and 4-hour charts, maybe even some daily charts, and look over some trades that we're planning. We might even look at some short-term charts, and we're more than happy to have your recommendations on charts that we should look at. So we're taking requests. You could put it that way, definitely. Definitely not untaking requests. But this whole webinar that we do is designed to do 3 things in particular. One, we want to introduce you to the methodologies for support and resistance trading that we use at Postcards from the Right Edge. That's the blog at fxstreet.com. That's at postcards.fxstreet.com, and it's a free blog that FX Street is so graciously willing to host. We want to familiarize you with those methods. Number 2, we want you to have a good time. Trading doesn't have to be boring and ridiculous.
No, that's why we're so...
That's because we're boring and ridiculous, usually. And number 3, the third thing that we want to have happen is we want you to make money / not lose money. That's what we want. We want you to be a successful trader. We want you to trade for a living. And we think that we do have some strategies and advice that for some people can be useful and helpful.
Yeah.
Now, Jar Jar, does it help everybody, or are some people not a good fit for us? Or
He's gonna say no.
So good to have you here with us. We also want to try to call Wayne McDonald on the phone. So if you could find his home phone number, or
Bob could find his number, couldn't she?
I'm sure she could. I'm not sure she will. Last time we did this webinar, we called Martin Pring, and he answered the phone. And I'm not going to say that it was the least enjoyable time of my life. All right, let's jump into. Let's jump into this. I'm going to unshare this, and then I'm going to reshare it by looking at the U.S. dollar. Oh. You should be looking at the U.S. dollar, Canadian dollar, 60-minute chart. I'm going to check real quick and make sure I did that correctly. ASA 076. Could you let us know if you can see the chart okay, or Chris, or anybody else? Can you let us know that you're accurately and okay seeing? No, you cannot see the chart. We're going to try that again then. Here we go. You should be able to see the chart now. How do you like me now? How do you like me now? You can see the chart now. Okay, excellent. Well, here's what we're going to do. We're going to start off by looking at the 60-minute U.S. dollar, Canadian dollar chart. And I'm going to remove everything from this chart. And I'm going to start from scratch.
Wow. All gone.
I'm starting from scratch. That was me starting from scratch. Sound effects are always encouraged. So here's a channel that we're going to draw. And Jar Jar, what is the purpose of a check?
I don't know.
As all of you know that join us on these on a regular basis, as all of you already know, these channels simply represent levels of support and resistance that the currency pair could not break through.
Yes.
That it just represents barriers that the currency pair met when going upwards and barriers that the currency met when going downwards. That's all it is. Nothing more complicated than that. Now, what we do is we look for breakouts beyond these channels. And for some of you, this has become just so rote and so ordinary that you're probably just bored stiff. So today we want to mix it up a bit. And we want to invite, like I said, Jar Jar and some other of our friends in to help us out with this. We want you to know to begin with that we have nothing against Klingons or whatever it is that Jar Jar Binks was. What was he?
I have no idea.
If anybody knows what he was, let us know. And we'll send you a TraderRadio.net t-shirt. So let us know what race is he. We just want to let you know that we're here to enjoy ourselves. So from time to time we might use accents that could offend you. Probably.
Yeah, probably will offend you.
All right, so this is the dollar CAD 60-minute chart. And to remind you of that, we're going to type in the name of the chart right here. if this currency pair, Jar Jar, breaks below the bottom of this channel, and it breaks below it, it closes below the bottom of this channel, what kind of a trade is that called?
We think it's a short trade.
That's right. And that's good, Jar Jar. And that's a Winnipeg trade. And a Winnipeg trade is the type of trade where a currency pair breaks below a rising channel or above a descending channel. So what we want to do now is want to take a look at all the different levels that it could go to as it breaks out. And here they are. If this breaks out below the bottom of this channel here, Jar Jar, then it's likely to go all the way down to this first Winnipeg line. And what's interesting is, for those of you who are used to Fibonacci numbers, and I know you are, most people are Fibonacci addicts, essentially what this level represents is a 100% retracement of the width of the channel in the first place.
You should say that's a pretty neat thing.
So if it broke out immediately, it would likely go down to about the 97.50 range.
And that's where Misa make money.
Yes, Jar Jar. Thank you very much. That's correct. You would make some money. Now, the stop loss would be placed right back inside of the channel. It would be placed right back inside. So if it broke out and closed below the bottom of this channel.
That's where Misa lose the money. Annie, help me!
And if it went back up inside and closed back up above inside, you would have a small loss, and you just take it and move on. And that would be it. And that's just what we call a Winnipeg breakout of the channel. But here's a question. Why are we talking about breakouts when the $CAD 60-minute chart, when these candles are just living inside of this channel? They're just living in there. That's where they are residing for now. I mean, it just bounced off the bottom of this channel. I mean, we could do a few other things, and here are a few other things that we could do. We could draw a level of resistance above a recent high inside this channel, and we could trade on a break or a close above those highs.
Misa buy?
Yeah, you should buy, right, exactly. And you could buy with a profit target of the top of the channel and a stop loss right back down below the line that was broken. And this is simply a way to benefit from a trend going upwards and the chance that a currency pair has to continue going upwards in that trend. So you've heard the common refrain, don't drink and drive. Well, that has nothing to do with this. The one that does is the trend is your friend. Sometimes the trend is your friend for life because you saved it. You owe a life debt.
We have a life debt with the trend.
That's right. So you just buy it all the way up because the trend is your friend. And for those of you who are momentum traders or trend traders, that's the kind of thing that you'd be looking at. This is the kind of trade you should be looking at. For those of you like me that are more interested in counter trend trade, well, you're going to be looking at trades that come on a break and a close below the bottom of the channel. Okay. Any questions, Jar Jar?
No.
Let's move on to see if there's any. Grandma, are you sick in bed? Says somebody. It's fine here. Do you have a singing? He's Gungan. Triffany gets a t-shirt. Triffany, are you coming to New York? We just have to find out about that. I'll have to bring you a t-shirt there. Excellent. I don't think anybody gave us Wayne McDonald's phone number. Yeah.
No, that's it.
Yeah, I wish. Oh, you're not coming to New York. Okay, that's fine. It says the audio comes and goes. I don't know what to say about audio coming and going. I'm not sure about that. All right, so if any of you have other charts you want to look at, we'll look at. Why are you counter trend? Wow, what a great question, Boyke. Let's take a minute and just talk about the reasons that I'm a counter trend trader. Number one, I was never popular in high school. Never wore the trendy clothes. Never wore the trendy clothes. And I think I got a streak going, even early on. A streak going early on where I just didn't feel that it was necessary or comfortable to be going with the trend. Like, it never meant anything to me.
Right.
And I think that carries over. I think our personality traits carry over into our trading. And it brought me great joy to see like a popular person get in trouble. The trendy people get in trouble. And I kind of I kind of like trading against the crowd, and I like standing off to the side and seeing when something has overextended itself, and being able to say, I'm gonna take that reversal, and I'm gonna trade it back the other direction.
Right.
And for those of you who join us at TraderRadio.net in the mornings for the live broadcast, or join us for the Chart School webinars that we do, the live trading room or whatever, you know that I've been buying the dollar Swiss for a long time, and today was like sweet redemption. I mean, I got burned for a long time. And when you go against the trend, or when you're a counter-trend trader, you do experience a significant amount of pain from time to time.
That's not uncommon.
But it's true also that people who trade with the trend experience pain. For example,
Sure.
People who bought the euro today on the breakout above the high, people who bought that breakout, they experienced an enormous amount of pain when Ben Bernanke said, just when you thought it was safe to go back into the markets again, we're going to screw it all up. I mean, they experience pain too. So,
Yeah.
you know, people often say that trading with the trend is safer. But, I mean, what does that really mean? It's safer because you like it better. You think it's safer because
Sure.
you like it. And we tend to think that things are risky that we don't like, and that things are unrisky or safe that we do like.
So it's a matter of preference of what you prefer. And what
Exactly.
fits with your
It really does
personality.
turn out to be a matter of preference because it's all risky.
Yeah.
And there's
Oh,
no
yeah.
getting around that. I thought you took Wayne's number at the ITC Barcelona. No, he didn't give me his phone number. Have you tried walking on your hand? Oh, no, I haven't. No, I really don't know what that's supposed to mean. But we'll try it out later on.
Sure.
Didn't you used to be able to walk on your hands, Dave?
No.
Okay. All right, we're now going to switch over to the charts again. And now we're going to switch to a Euro 60. Why don't we switch to, everybody always wants to look at the Euro dollar, and have we got a chart for them? So let's do this. Let's make sure that it's visible. We're going to turn off and turn back on. You should now be looking at the Euro US dollar 60-minute chart, but the 60-minute chart. But we are going to switch over back to the daily in a moment.
Sure.
But look at that. Okay, now we're switching over to the daily. Now this is important because we've been following this in the postcards from the Right Edge blog lately, and we want you to follow along with us. We've been looking at this daily trend going upwards. And we started with the daily looking upwards, and then we dropped down to the 4-hour chart. And do you notice that for a while, Dave, the pair was trading inside of this 4-hour chart?
Yeah.
And then it broke above that channel, and now it looks like we could be, and we said this the other day, there could be a break below the bottom of this rising channel on the euro. This is the 4-hour chart, and simultaneously a break below this red trend line.
Yeah.
Let's drop down to the 60-minute chart just to get a better look at that. So that's what we're looking for. We're looking for a close below the bottom of the channel and a close below the bottom of the trend line. Now, it could bounce off this red trend line.
Yeah, it
Could very easily bounce off that trend line, but that's not what we're talking about just yet. If on the 60-minute chart it closes below this red trend line, I strongly and firmly believe that it will fall all the way to the blue trend line.
Blue one.
Just a previous level of support. That's the next net that it could reach. That's the next safety net that it could fall to. All right, so that's a trade. And if it closed back inside the channel, we would get out of that trade immediately. Now, on the other hand, what if, Dave, look at this fall today. It fell today and hit the bottom of the old channel.
Yeah, and bounced right up.
Bouncing. What if it falls and hits this bottom red trend line and bounces upwards, creates a bullish candle or whatever?
Right.
Would you be willing to buy it?
Yes.
Yeah, I'd be willing to buy it. I'd certainly consider that. I wouldn't be opposed to it at all. And that would be a buy trade. So if you're a trend trader or let's just say you're a member of the crowd, you do what everybody else does, and that's the way you like it.
I mean, the way I like.
Miss a like a traded crowd. I don't know how to do this, Jar Jar. You're so much better than I am with it. I mean, if everybody jumped off this cliff, would you join them? If the answer to that is yes, then after it creates a bullish candle and bounces off that red trend line, you'd simply go ahead and buy, and you'd target, I'd say the top of that channel as a profit target. Then you'd move your stop to break even and maybe go for the previous highs up at 5,500.
Sure.
And that would certainly be an opportunity to trade with the trend. So support and resistance trading gives you an opportunity to buy with the trend or to sell against the trend or vice versa. Let's see if anybody has any requests coming through. Hey, Rob, I sold at the very top. Excelente. Sold at the very top and had a great run with the euro dollar as well. Wow, that's great. Why do your charts not automatically show the time frame? Well, I don't know. It has a lot to do with using HotCom to share my charts. I can't show the whole chart for some reason, so I don't know the answer to that. It does show it, but you can't see it when I'm sharing it. Nico says, do we need to wait for the candles to close? Yeah. Yeah, I would say waiting for the candles to close is a really, really good idea.
Yeah.
So
just makes a better decision that way.
Yeah. Yeah. Exactly. All right. Eric, good to see you here. If that's the Eric, I think it is. Yeah. Asa076 asks, what's your major things for when trend reversals?
Oh, trend reversal songs.
Let's see, reversal. Let's see. While we're looking for another chart, why don't we next pull up the pound yen? Because we know a lot of people like to trade the pound yen. So that's the next one we're going to pull up. This is the pound yen, and right now it's the 5-minute chart. We're going to switch over to something a little bit longer term. And this is a linear regression channel. And I want to show you sort of some of the stuff that we were thinking about the other day and how we played this out. What we did the other day was we drew a linear regression channel with linear regression channel tool that XTIC comes preloaded with. And it's right here. It's called regression line. And you simply click on that, and you simply... It draws linear regression lines for you. And as you can see, it draws them right over the currency pair for you.
Yes.
What I did was I wanted to see if I could trade back to the bottom of that linear regression channel with the breakout. So here's what I did. On the 5-minute chart, it was traveling inside of a channel, just like we talked about. Top line here, bottom line here. And I simply wanted to wait for a close outside the bottom of that channel. Jar Jar, what do we call that?
Ask me to say it's a Winnipeg.
It's a Winnipeg trade, right? It's all about the Winnipeg, eh? Hey, hosers, it's a Winnipeg. So whatever. It's a Winnipeg line. And it fell below the bottom of that channel. And that created a short trade or a sell trade, a Winnipeg trade. And we wrote it down to another level of support.
Yes.
So we use a short-term level of support or resistance.
As a trigger
to enter a trade down to or up to a longer-term level of support and resistance.
Me like that a lot.
Yeah, I love that a lot. And that's simply an example of how you combine charts to make money. Now let's see where this goes. I don't know where my chart went. Okay, there it is there. So it fell down to the bottom, and then, not surprisingly, it rose all the way back up to the top. And so now we're at the top of a linear regression channel. And maybe we could go down to the 5-minute chart. So we could do this. Let's go to the 10-minute chart. Go to the 10-minute charts and do this whole thing all over again. Now, I don't know if we can, but we'll give it a try. We could do a channel bottom here and a channel top right here. That might work. I don't like that so much. We could use the linear regression tool, Dave.
Again.
Okay, that could be the linear regression tool. We can wait for a close below the bottom of that and trade it now short all the way back down to the bottom of the longer-term linear regression channel. And these are just freely available tools on every single charting platform in the world, probably.
Yeah, most of them have.
And so that's the pound yen, and that's kind of the things that we'd be thinking about on the pound yen. If there are any questions about that, we're definitely willing to talk about those and let you know. Let's see here. Looking for a song about reversal. Love is the reversal. I don't know if that's going to be a very good song or not.
By Starfield.
By Starfield. So here we go back to let's go back to the no. There's no charts being shared right now, so we're back just in the chat room. So don't be surprised, don't be alarmed. There is no charts right now. Yeah, he meant signs, not sings. Yeah.
Oh,
yeah, I got it. Would you be using a trailing stop as well? No, I don't use trailing stops. Those stops that we talked about 60 moments ago, I just stick with the stops that we talked about. I just keep the stop back inside the channel, and I don't worry about trailing stops.
When I use trailing stops, I usually just stop out.
Yeah.
That's just safe.
Yep.
Yeah.
Let's go back to the charts and let's answer Asa 676 question. Let's answer his question about how to time or how we think about timing a reversal. I'm going to delete this other channel right here, and I'm just going to put this one. Let's say that this is the 5-minute pound yen chart. You should be looking at the 5-minute pound yen, and it's in an uptrend. It's in a linear regression uptrend, and the question is, how do you time a reversal?
I look at the candle.
You look at the candles, and you look for a break below the bottom of the channel. You look for a close and a break below the channel. That's the sign. That is it. That is the necessary trigger to see a reversal forming on a currency pair that's been trending in one direction or the other. That's it. Dave, do we have to use support or resistance? Well, do we have to?
No.
We could use other tools, but this is what we're choosing to use.
Sure.
Do you used to like a support and resistance?
Me to like support and resistance.
It just happens to be one of our favorites.
Yeah.
Right? Okay. So that's how we time it. Now, other people might use the ADX or the DMX or the BMX or the Huffy, other stuff.
There's a lot of stuff out there,
but
this is just our preference to use.
Right. This is just our preference.
Yeah.
Candles, right? The first sign. Yeah, I think we've answered that now. I think we've answered what our first sign might be. Go ahead and look. If anybody else would like to look at any of the currency pairs, we're more than happy to look at them. Why don't we look at the U.S. dollar index? Because this gives us another example of something that we talked about. This is the U.S. dollar index, or in other words, the USDX. And this is a measure of the value of the U.S. dollar against a basket of currencies from around the world. Now, it fell outside. This is interesting. If you'll notice, folks, it fell outside the bottom of a descending channel. Now, Dave, why is that different? Why is it different for a currency pair to fall outside the bottom of a descending channel as opposed to a rising channel?
It's going more with the trend.
This is a break with the trend.
Yeah.
Can people take this trade?
Yeah, you're trading with the trend on that one.
You're trading with the trend, so it's not like they couldn't do this.
No.
Right. Okay. Let's do this. Let's get some levels in here. Let's do -1, -2, and -3. What's interesting is this is channel tools. These are channel tools exclusively available right now in XT, which is the charting platform that we use right now. So these tools are exclusively available in XT. But it shows us, for instance, it shows us how far this thing might go when it drops outside of a channel.
And that Winnipeg is the first area.
And that Winnipeg would be like the first target area.
Mm-hmm.
That doesn't always get down there. It sometimes can only get to a 618 retracement or a little bit lower than that. But it always, once it breaks out, goes to some fib level or fib extension outside the channel. Now, this isn't a Winnipeg because a Winnipeg is a trade with against the trend. It's a trade against the trend and the counter-trend trade.
Right.
So this is kind of like a unipeg or something.
Unipeg?
A losapeg instead of a Winnipeg or whatever it is. It's just it's a breakout beyond in the direction of the trend. And this doesn't happen as often.
No.
This actually happens more often on the testing. Silent. Okay, we're going to log back off. We are going to log off and back Oh, sound back. Okay,
Oh, got it.
now. Well, that worked. Our internet just briefly went out, and we apologize for that. Okay. There you are. Perfect. Okay. Now we're going to, I think we're going to look at a different chart now. We're going to switch over here. I think we're listening to the BG now. Switch over to the 60-minute chart.
Jar likes the beat.
Okay, we'll bring up the chart now. Oh, wait, that's not going to do it. It's a timed window. How deep is your channel? How deep is your channel?
Need to like channel.
Here's the pound Swiss. The pound Swiss is pretty darn good at obeying levels inside and outside of a channel. I mean, it's pretty exceptional. I want to take a look at this right now. So let's look at the 618. Let's look at also the 382. So as you can see, the pound Swiss broke outside of a rising channel and did descend. And it got down, many, many pips. It got down like 130 or 120 pips. And then it rocketed back upwards inside the channel. We've talked about this with many of you before, but here's another kind of support and resistance trade. We call this a Manitoba, after Manitoba in Canada, where it's very icy right now, eh? It's rising back inside, and if it closes back inside the channel like this right here, that's a sign that it may go right back up to the top of the channel that it was in before, that it remembers the channel. Remember the channel. Remember Manitoba. Remember. Channel breaks lead to hate. Hate leads to suffering. Suffering leads to losses in the currency market.
Eddie, stop trading, Eddie!
That's a Manitoba move, and the target would be the top of the channel in this case. But it's not surprising that when it broke back inside the channel, that it made it right back to the middle line of the channel that we looked at in the first place. So that's not surprising at all. In fact, I need to adjust these levels a little bit because there's some level that's a little bit off. There we go. It made it right to the middle line that you'll see right here. That's the middle line of the channel. It remembers the middle line of a channel that it hadn't seen in quite some time.
Fascinating.
It's totally fascinating. And when this currency pair broke up inside the channel, you didn't necessarily have to wait for that candle to close. Once it broke inside that, and it got right up to, say, for instance, this level right here. When it got to that level, it wouldn't have been a mistake to go ahead and buy it. Stop loss below the bottom of the channel, and a profit target at least at the middle of the channel for a move to break even.
Yeah.
And then try for the very top of the channel. Let's see what we got. Any questions coming through? Barry Gibb is so happy. That's so true. Can we confirm trend lines with moving averages to confirm the trend? Wow. There's no reason why you couldn't use trend lines and moving averages together.
Yeah.
Not at all. And you pick your favorite moving average, you draw your trend lines, and you go back in time and you do your testing to see what might work the best. It's good to have the mic on. It helps with the sound a lot.
Yeah. I
appreciate that advice. That's great. Let's look at another chart. If anybody has any requests for charts, please let us know. We looked at the, you want to look at the pound dollar, Dave?
Oh, sure.
All right. This is another example of support and resistance. This is going to be one of my favorites. All these support and resistance lines come back and come back and come back. So let's look at this.
We used to say that chart looks like Gungan Battle.
A break of this trend line right here. A break of that trend line leads to a move to this trend line. Then a break of this trend line right here leads to a move all the way up to this area right here, which is an old trend line that had been broken long ago. You see how all these trend lines just come back?
Yeah.
They come back later and later and later. They always come back, meaning you don't want to necessarily delete them. This line down here, this line is 1.9341 right here. That line on the pound dollar, that goes way, way, way back in time to an old level of support and resistance that the currency pair jumped up against for a long time. And we drew that line, and lo and behold, it fell right down to that level all over again. And now it looks like the pound dollar might have topped out up here.
Yeah.
This is the daily chart. It might have topped out up here when it almost hit the dashed trend line. And now we can see it reversing and going all the way back down. So what we do is we pull up, oh, don't move that, Rob. We pull up the shorter term chart. And we do this whole set of trend lines and stuff. We do it all over again. We do the same thing we just did, just we do it on the shorter term. So I'm drawing a trend line here on the 1 hour chart. And you can see that that's trend line number 1. We'll break out to the 4 hour charts, and we'll see if there's any other trend lines we can draw. Now, there's nothing else we could really look at there. There's no other, we could maybe draw one like this. Okay, we could draw those. I can replicate this chart. And we can get a better look at it if we delete it.
Sure.
So we can have lines like this, Dave. Now back to the 60-minute chart. Wow, maybe we do need the 4 chart. Yeah. And a close below this 4 hour trend line up here could bring us all the way down to this longer term daily trend line down here.
That's the way to go.
I mean, it sounds simplified. It sounds oversimplified. But the great things about this type of trading is the risk to reward is magnificent. You're not risking very much in exchange for a big profit target.
Right.
There's definite levels. It's either yes or no. It's not either or wishy-washy mumbo jumbo. It's totally testable. It's completely testable. Chart incomplete. No problem. Bring the chart. You should be able to see the chart. You should be able to see. This is the area you should be able to see. I made that whole thing yellow. And the trend line goes all the way back, just like we drew it. It goes all the way back to the first January 21st. It goes all the way back to that level. And so we would just wait for that. We'll just be waiting for this to close below this first trend line. I'm going to color this one. I'm going to color this one blue, so it's a little bit easier to see and easier to compare. So I think we captured that chart again. I'm going to try one more. Oh, the chart's okay now.
Okay,
Excellent.
good.
Now, if there are any other, someone says, could we look at the pound yen 1 hour and 4 hour? Sure. It'll just take us a moment to get to that again. We looked at the 5 minutes. But let's go ahead and switch out here to the 4 hour and the 1 hour. Okay, here is the 1 hour pound yen. Dave, do you think it's fair if we draw a channel somewhere on here?
Yeah, I think we could.
Let's give it a shot, right?
I think it will.
Okay, I'm very happy with that.
Yeah.
What I'd love to see on this 1 hour chart is I'd love to see a close above the top of the channel here for a buy, and for a sell. Chart not okay. Please capture. Okay, you should be able to see the chart. I don't know. I think maybe sometimes I'm moving around.
I don't know.
And they think that they're supposed to see the whole channel, but
Yeah.
you're not supposed to see the whole channel all the time. But that should work now. So here's a shorter term view of that, Allison Wilcox. And I think that we're looking at an opportunity perhaps to sell this currency pair below maybe this level of support right here, below 205.72.
Mm-hmm.
And it could fall drastically if it goes below that level, all the way to the
Down
bottom
the
of
very
the channel.
bottom.
Now, if it closes above the top of that channel, we could make it all the way back up to, say, this old trend line. We could make it all the way back up to 211, 212, 213 on a buy trend. Because it does look like there might be a rebound on this pair.
Yeah.
I mean, the pound yen's been left for dead.
Yeah, it has.
Yeah, it has been left for dead. But the interest rate differential is still such that it does pay to hold a buy trade in the pound yen. It doesn't pay as well as it used to, but it certainly does pay. And it definitely is still a possibility. So look out for that opportunity. Now, Allison has us to also look at the 4-hour chart. So we're on the 4-hour chart now, and I don't want to erase that. I want to be able to see that later on. On the 4-hour chart, this is kind of complicated. I'm not sure I like this trend line, but this is one thing that I'd be willing to look at. Look for a close. I'd be willing to look at that. A close above that trend line. That's another way to trade it long.
Yeah. You can do that.
Yeah.
Rob, what about a horizontal trend line below the lows that are here? If you could make that a little bit bigger.
So a horizontal level of support and resistance?
Yeah.
Show me with your finger. Still not big enough?
Yeah, well, I was thinking of about right there. But I wanted to see, because briefly it looked like that level was once. Maybe that's not the best.
No, that's pretty good. We've got to bounce off that level here.
Here.
We've got one up there. And consolidation the rest of the time. It's never going to be perfect, but that's pretty darn good. You know, I'd be happy to maybe have a break and a close above this red trend line for a buy. Stop loss back below the red trend line or back inside the channel itself. And then perhaps a profit target at 208.79.
And that might be when you might do a profit target, or you might move your stop loss to break even or something like that.
Yeah, exactly.
I really like horizontal levels of support and resistance for profit targets.
Mm-hmm.
And
yeah, I think I actually agree. I prefer those horizontal levels of support and resistance for profit targets.
Yeah.
And stop losses, because they're definite levels that don't shift in time. So you could set your profit target in this example on the chart in front of us. You could set your profit target at 208.079 and have it fly off the screen. That is bizarre. You could have it at that level,
yeah,
and then leave it and know that that level is not going to change.
Right.
Whereas opposed to if you have a dynamic level that's moving with time, like a trend line, a diagonal trend line is going to move with time. If that's your profit target, it's going to move with time. So if you went to bed one night and you set your profit target could move.
It could move. Right.
Yeah.
But if you're awake, it's fantastic. You know,
Yeah.
so the horizontal is good for leaving it run code.
Yeah. Sometimes the view area goes off the screen. And I'm not. Oh, it's because I'm using a widescreen monitor. That's probably what it is. So I'll put it right smack dab in the middle of my monitor.
There you go.
There we go.
There
That's
you go.
probably what did it. Here's a dollar-yen 60-minute chart, and here we'll share this. Okay. Let's see if we can draw a channel here, Dave.
Yeah, there's the 10.
And that's okay.
Yeah.
That's spectacular. When I can't really find a good channel with 2 peaks and 2 valleys, sometimes I switch over to the linear regression channel. The linear regression channel in HD. I mean, that's okay.
Mm-hmm.
I'm not sure I like that either. I mean, I like that one a lot better.
Yeah.
Yeah, that looks good. Now, if we break and close above this linear regression channel, so for right now, if we break and close above, say, 103.48, we could be making our move back up to the bottom of this old channel that we see here.
Yeah.
And to see more about that old channel, let's move out to a longer-term time frame. And here it is. So that's an old channel on the dollar yen. It was broken, currency pair fell, and then it may rise up. Now that would be a long way for this to go, but it's only like 300 points. Let's it's only 300. Let's do some levels. -2, -3, -4. I want to show you the power of support and resistance. This currency pair dropped outside of its channel up here on the 4-hour chart and fell down to the second extension. It went 200% of the width of the channel. Then it fell further and almost got very close to tagging the 300% extension, meaning it extended out. The channel was originally 108.74 down to 106.91, about 200 pips wide.
Yeah.
And it goes in stages of 200 pips. So if it breaks, so now we're back again, and the microphone should be on.
All right.
And everybody should hear us just fine.
Happy days.
Yep. Yeah, we should be back in. That's great. Thanks. We just had some internet problems today, some connectivity issues. We'd like now to take some questions that came in during the time that we talked today. If you had questions, or if you want to look at a different time frame chart or a different currency pair, we'd be happy to look at that. But just to do an overview here, this dynamic levels of support and resistance mumbo jumbo. It's just drawing trend lines. And if you need help or want to learn more about drawing trend lines, let's go to Amazon.com, and we'll make the browser smaller. So Amazon.com, and type in, for instance, Martin Pring price patterns. This is an excellent book about support and resistance, Pring on price patterns. That's an excellent book. Technical analysis of stock trends. This is the most boring book ever written on the planet. It's now in its 9th edition, I believe. I believe this is the 9th edition with, 9th edition, new updates and everything. It was originally written by Edwards and McGee, but now this W.H.C. Bassetti is added to it, and he continues to edit it. It's probably the most important book written about support and resistance ever.
Well, this is the one that goes way back. I mean, this
Yeah.
was written a long time ago.
Yeah, the original edition was written in the 30s, 40s, or 50s, and it has old railroad charts and stuff. The guy's drawing trend lines on old stuff. It's just old school technical analysis and old school trend lines and some stuff about Dow theory. And it's a good book. It's expensive. It's $99.
Yeah.
And you can get an older version for less. And you can look for that in Google, or I think you can look for it in Abe Books. They should have it too. Stock trends. See what we find here. But you can look for the book Tech in Market Profile. Oh boy, I'm gonna have to technical analysis. So we got a message in HotCom. Cam Loft. Oh, okay. We'll get it back. Technical analysis of stock trends. Here's the book. So here's a copy of at Abe Books. Here's a copy of Technical Analysis of Stock Trends for $14. So you don't have to moderate bumping and shelfware. I mean, you can get a good copy of it right there. Lost again. You know, what a weird situation with the stuff today.
Yeah, keeps bumping off and on.
So that's the book there. So you can go to Abe Books and you can find copies of these books for far less than you would, for instance, find them on Amazon or whatever else. And that's Technical Analysis of Stock Trends. And you might get on Abe Books, you might get a copy of it that's from 1968 or 1950, but it's going to still be worth getting.
Yeah.
It's for that much less and for saving the money, it's definitely worth it. there's anybody who has, have you used Auto Chartist? And could you use that as a main source for identifying? Could you use that for a main source for identifying your trends, or still rely mainly on an eye for spotting the pattern? I'm not familiar with Auto Chartist. I don't use it. I don't have any information about it, but I do know that people who use it have been really happy with it. And
wow, that's great.
Yeah, and so if that's what you're using, as long as it can display support and resistance and moving averages and things like that, I think it would be definitely worth it. You want to keep your expenses as low as possible when doing anything related to trading. So anything that keeps your expenses low and puts more money in your bank account and in your trading account, that's what you want to do.
That's exactly right.
Yeah. If there's any other questions or charts that people want to look at, there's not a lot of requests today. Did you notice that?
People are kind of silent.
Yeah, people are kind of silent. They must be tired from all the trading that they did this morning when the Federal Reserve blew up the U.S. dollar. At least I like the Federal Reserve. It's like the dollar Swiss is finally coming back, you know, off of its highs or whatever. So, euro dollar. Now, we'd be happy to look at the euro dollar.
Yeah.
I think we looked at the euro dollar already. Let's look at it. This might jar your memory. Here. We'll pull up the chart. Just give us a moment. And we'll try to share this correctly. This is the euro dollar 60-minute chart. And we looked at the euro dollar 60-minute. We looked at the euro dollar 4-hour. We looked at this currency pair as it has been. Oh, that's.
No.
Wow, that's not going to work, is it? That's hilarious. As it was breaking outside of this channel right here. This is the and we're looking for it to break and close below the bottom of this channel and below this red trend line to take us down to the blue trend. And you can watch the archived version of the webinar just to get a better look at that as well. Say my best regards to Harry Beans. We will certainly do that. Gosh, I swear HotCom drives me insane. Why did what the Fed do help the dollar? It did it because people feel like the Fed is shoring up the American economy. So in the short term, people feel like it's a vote of confidence in the American economy. Jose asks, what about exotics like Brazil or Russia? Since a lot of money has been pouring into the BRIC economies. What an awesome question. And Jose, maybe we should do a support and resistance webinar next month, but exclusively focus on the emerging market economy.
Oh, that would be fun.
I'd be more than happy to do that.
Yeah.
Yeah, absolutely would be thrilled to do that. We could do the Mexican peso, the Hungarian whatever,
I don't know.
the Turkish lira, Brazilian real. Yeah, that would be absolutely fine. I'd love to do a whole webinar on those exotics. And maybe, Maud, we could do even a special webinar in addition to the regular one and talk about some of those exotic currency pairs. I heard Elliot Spitzer knows a lot about them.
He knows a lot about
exotic
something.
Oh, wait, that was something else entirely. All right, so that's the webinar for today. I don't have anything else. Without the requests, we don't have anything else. No. We're very excited that we're very excited that you joined us today. Boyke asks, what about your moving averages as you did long ago? All that moving averages stuff, that's all part of the one-on-one, the web-based training that we do. It's not part of the free stuff that we do right now. And we understand that some of you want to learn about that, but for right now, that stuff is really a part of the training that we do online. Can you put up the name of that good book, please? I'd be happy to. Let me write it here. Technical Analysis of Stock Trends by Edwards and McGee. And also, alternatively, you don't need both of these. You can look at Spring on Price Patterns. Will this webinar be archived? You bet your tushy it will be, with all of the breaks in the sound and everything. The chopped off charts.
Be there.
Yeah, it'll all be there. It's in there.
Hey,
Robbie's have a request for a pound Swiss.
Pound Swiss? You want to look at the pound Swiss?
Yes.
You got it. Oh, we looked at that already.
Did we look at that already?
Yeah, we did look at that already. Do you remember Jar Jar?
I'll slap Jar Jar around.
Which book is better? Technical Analysis of Stock Trends is excellent. If you want the Bible of technical, if you want the Bible of support and resistance, you need to get Technical Analysis of Stock Trends. It's boring as all get out. It's just totally boring. That book, Technical Analysis of Stock Trends, it's got to be the most boring book on trading ever written.
But if you've got insomnia, you can't sleep at night, you can read it and it will put you right down.
I should have read it last night. That would have been a big help. Yeah, absolutely. And drunk. I don't know what this. There's some seriously deranged songs.
Think of the names of some of these bands. Extol.
Yeah, there's some serious.
Fish Industry.
Yeah.
You found the reversal.
Peter Buffett, Reversal of Fortune. Original music from the film Triathlon.
Is there a film called Triathlon?
I guess. Yeah, we could definitely take a look at that. The name of the book is, once again, Technical Analysis of Stock Trends. Dave, Rob, I am new. Would you trade technicals during the New York session? I'm from the East Coast, so that's my time. I hear that it's dominated by news and technicals. Technicals don't work for short-term traders during that time. Thank you. You know, that's like people saying, all kinds of health stuff. People say, oh, don't eat red meat because red meat will kill you. It's like, okay, some people, you know, George Burns smoked cigars, drank wine, and ate red meat for 99 years of his life. So be very careful about making blanket statements that are applicable to everyone. What's right for you in the New York session might be different than what's right for somebody else. And it bothers us when people make blanket statements about, oh yeah, technicals don't work during the New York session. And that's usually some windbag blowhard jackhole who wants to promote something that he's doing or selling or whatever.
Yeah.
You know, technicals can work in the New York session just like anything else. It only though works for you if you test that it works. You have to do your own testing and experimentation. Bible of Trading Books, Technical Analysis of the Financial Markets by John Murphy. Yeah, I guess. I'd say it's Adventures of a Currency Trader, but that's just my opinion. Yeah, you're welcome, everybody, for the webinar that we did today. We hope you enjoyed it. We especially hope that you enjoyed. Hey, Sean, good to see you here. Hope to see you soon in person. And Dave, that's it.
That's it. Se acabó. Se acabó la tema.
Thanks for joining us. And stay tuned for any additional cool webinars that are coming up next.
Yes.
And don't forget to join us Monday through Friday at 8:30 a.m. Eastern Time for TraderRadio.net. That's a free radio broadcast.
Free radio broadcast.
Yeah. Sometimes during the broadcast, we even stop in at FX Street webinars that are going on at the same time.
Yeah. We did that last Friday.
Please fix charts. Yeah, sure.
Fix them.
Okay.